Socially responsible investing, or SRI, can be a great way to build a more sustainable and ethical portfolio. So in this video, we're going to discuss what socially responsible investing is and how you can get started. For people who want to invest in companies whose values and practices they support, socially responsible investing may be something to look into. So the point of socially responsible investing is supporting the companies whose values you agree with and whose practices you agree with. It focuses on the social, environmental, and ethical impacts of these companies, and the point of socially responsible investing is to include and support the companies that are making a positive impact in those areas and to exclude the companies that are making a negative impact. There are several different types of socially responsible investing, and the type that you choose is likely just going to depend on your individual values and beliefs, but let's go ahead and look at a few different types. SRI, or socially responsible investing, is just the general term that encompasses all the different types of socially responsible or sustainable investing. Socially responsible investments are usually judged on three categories: environmental, social, and governance. This is why you'll hear the term SRI used interchangeably with our next term, ESG. So ESG, like I just said, stands for environmental, social, and governance. So these are three categories that companies and different stocks and ETFs are judged in, and there are a few different factors that can go into each of these categories. I'll throw up a table on the screen that shows you a few of the things that could potentially be under each of these categories. Next, we have impact investing. Impact investing is a strategy that focuses mostly on the social impact of these companies. So with impact investing, sometimes the returns on these will be a little bit lower because that primary focus is on the social change that those companies are making, and any profitability really just comes second. There can, of course, be many other types of socially responsible investing. You may choose to invest based on your personal beliefs, religious beliefs that you follow, or any other practices that you implement into your own life. Socially responsible investing comes with its benefits and its drawbacks, so let's look at some of the pros and cons that come along with socially responsible investing. Let's start with the pros. You get to invest without compromising on your own values. So if you've been hesitant to invest because you don't want to compromise on certain beliefs that you have, socially responsible investing allows you an opportunity to only invest in the things that you want to support. It also allows you to start putting your dollars towards the companies that are making the changes that you want to see. And it can encourage companies to use more ethical and sustainable practices. As SRI becomes a more popular investing strategy, hopefully more companies will see the benefits of operating a bit more sustainably and a bit more ethically. One of the cons is that there's no one-fits-all option. So something that you may see as a good SRI-friendly investment, someone else may disagree with you. This also means that when you are looking for different stocks and different funds to invest in, it may meet some of your criteria, but it may totally miss the mark on other practices. Just as our individual values differ, the values of these companies will also differ. So it really leaves it up to you to choose what you will or won't compromise on and what you actually want to invest in. Another con, like I mentioned earlier, is that sometimes socially responsible investing can lead to lower returns for you. If the company's main objective is to make that social or environmental change, then profitability may come second, which means that you may see lower returns than you would with other investments. And the third con is the potential for greenwashing. This is when a company paints a public image of being sustainable, eco-friendly, ethical, all of that, when in reality, their company is still engaging in unethical practices in the background. So you may be led to believe that you are investing in a socially responsible company, when in reality, that company does not actually align with the practices or values that you thought you were investing in. If this is something that you are interested in, it isn't as hard as it seems, so we'll walk through 3 easy steps to get started with socially responsible investing. The first thing you need to do is to decide which of those ESG categories are important to you, and this, of course, is going to vary from person to person. You can go back and look at that table earlier in the video, or here are a few of the categories that you can start looking for in the companies and funds that you are potentially investing in. Next, you need to choose a platform. Pretty much any brokerage is going to work for this, but M1 Finance does offer a few extra options that make it just a little bit easier. Third, you need to actually find what you want to invest in. So there are a few different ways to go about this. If you'd like to pick your own individual stocks, that's always an option. And if you want to do research on them, Yahoo Finance is a great resource to do that. When you go on Yahoo Finance, you can simply search for the company's stock you'd like to buy, and you should see a sustainability tab over on the right. Under this tab, you'll be able to see the company's environment, social, and governance risk ratings, and each company is given a score for those individual categories as well as an overall score. And they're also scored on their controversy level. So if they've had any weird stories come out, or if there's just general controversy about that company, that is what goes into that score. From this page, you'll also be able to see the scores of similar companies as well as any involvement in specific activities, for example, animal testing or selling tobacco products. So if any of those are important factors to you, that's where you can immediately see all of those categories. If you do choose to use M1 Finance, every time that you buy one of those stocks, you'll be able to choose what percentage of your portfolio you want that stock to make up. So it's fully customizable and a really easy way to start building an SRI portfolio. If you don't want to pick your own stocks, you can always invest in ETFs or funds instead. So with these funds, what you'll want to do is to go and look at their holdings. This just means which companies are actually in those funds. From there, you can research those stocks the same way and see if any of those funds align with what you are trying to do. And just like stocks, those ETFs can be added to an M1 Finance portfolio. And again, you'll set those percentages of how much of your portfolio you want them to make up. As a different option, if you would like to have an SRI portfolio pre-built for you, M1 Finance does offer those expert pies that I always talk about, and they do have a couple of options for socially responsible investing portfolios. You can go through and look at these, look at the funds that are in these portfolios, and see if any of them align with what you want to do. SRI can be a great way to get started investing. If you do want to see what it's like to use M1 Finance as a brokerage and how to sign up, go ahead and click this video right here where I walk through how to sign up for an account and kind of give you an overview of the platform. And I'll see you over there.